welcome to yet another episode on our channel Talk of Town. We are here in our weekly series called Market Wrap, discussing global and Indian markets with subject matter experts. And today, with me, I have two prodigies, Mr. Prabhanjan Rao, SEBI registered investment advisor representing Elysian Advisory, and Mr. Ashwin Kumar, director of DA Capital. Welcome, both of you.
Hi, morning, boys. Morning to all the viewers.
Hey, hi, very good morning to all stock market enthusiasts and Ellen and Ashwin. A rocking good morning and a filter coffee salute, where markets gossip louder than your neighborhood chaiwala. And Ashwin, again, I'll always come back to you. Today's tale is a crisp, crunchy, and deep fried in volatility.
Yes, sir. Yes, it is.
So both, whether it is volatility or otherwise, anything that is deep fried is bad for health.
He'll always have a counter. He'll always have a counter.
Absolutely.
So good. I would say a decent week
Yeah.
across the globe. All the indices, be it US markets or Indian markets, rallied at least a percentage and a half. Looks better comparative to the previous weeks. Of course, we'll definitely come to gold and silver. That's definitely a point of discussion. But as usual, we'll get started with our global fundamentals. Over to you, Prabhajanji.
Great. Thanks, Ellen. Coming to the main parameters during this week, yes, it was on the global parameters, it was a muted week in front of and as far as the parameters are concerned, like crude is around 65.6, the Brent crude. It's around the same levels as of last week. The dollar index is around 97.82. Is again, it's around the same lines. But rupee, it weakened to 88.27. It's pressurized by the domestic equity and weakness and the FI outflows. Rupee at 88.2 always, it's a clear signal of stress. It's not merely the dollar strength, but the tariff overhang and the capital outflows weighing on the sentiments. But for the RPI, it's always a balancing act and a double-edged sword, defending aggressively and risk draining reserves, or they might allow gradual depreciation to protect the competitiveness. So that's one thing which we always need to have a watch on the rupee. The CBOE volatility index is 14.76, and India VIX, look at it, I mean, 10.12, which is at a multi-year low. And the
I'm
10-year,
not happy. I'm not happy as an option trader. No.
absolutely, I understand that. So, I mean, it also underlines a lot of undercurrents in the market. You know, and the 10-year GSEC yield is 4.08. Gold, as you rightly mentioned, Ellen, it climbed as a safe haven amidst the geopolitical risks, and it reached 3,592. The Bitcoin, it's increased a bit, it's 115.7, and it was trading around 111, 112 a couple of weeks back. To talk about the global fundamentals, mainly the US being the mother of all the markets, for the weekly performance, the S&P is up by 1.6%. I mean, the Nasdaq rose about 2%, Dow gained 1%. But the Russell 2000 was barely up, 0.3% gain. What was the key drivers behind the market? If you ask me, the rate cuts anticipation and inflation data. The U.S. inflation and the jobs data over recent days suggest a balance. The labor market softening somewhat, but inflation isn't running away. And this has been reinforced. The expectations that the Fed is very likely to cut rate at its meeting next week. Um, when we talk about rate cuts, we shouldn't ignore how the treasury yields rose, in the US. How was they flaring? It rose slightly midweek, but trimmed earlier losses. Mortgage rates have already reacted, edging down in many cases. And one thing I have also observed in our US markets is like high valuation and profit taking. So we saw some sort of a caution that crept in, with many indices near or record levels. Profit taking in large caps is very clearly evident, especially where growth expectations are lofty and margins are uncertain. Again, we saw a strong performance by AI, tech, or select names. For instance, stocks like Micron got upgrades, while others like Oracle saw mixed behavior. Though Oracle financials in India really gave a multi-bagger return, though we are not recommending that. Um, AI momentum is always garnering in US. Similarly, you see companies like Warner Bros. Discovery saw a sharp rise on takeover speculation. On the geopolitical and external factors, the trade tension still persists, particularly the US and tariffs on India over Russian oil purchases are contributing to the risk assessments globally. These have implications not just for trade flows, but currency, capital flows, and the sentiments. So, amidst all this, what is the Indian impact? Very clearly evident currency and the capital flows. The rupee, which had been under pressure, rose slightly to 88.27 on Friday, recovering from the recent record lows of 88.44, but not very significant. However, the outlook remains still fragile. Persistent foreign portfolio outflows, trade tensions, strong US dollar trends, these continue to weigh on the Indian INR. Again, on the trade tariffs and policy shocks, US again it has urged the G7 or EU to impose tariffs on China and India. Again, now this policy shift is Trump's shift is going to China again, and that is again on the continued purchases of the Russian oil. India is already facing a 50% tariffs, on certain exports tied to these issues. So to mitigate this damage, India has moved with sweeping GST reforms, GST 2.0, rationalizing the slabs, reducing the tax burdens on many consumer goods, etc. But this will take impact from September 22nd, 2025. Um, Again, on the consumption of the growth story, GST cuts are estimated to spur additional consumption demand of something like about 1 trillion INR in the second half of the fiscal year. That's what we are foreseeing. And the reforms are also expected to reduce the headline inflation by 75 basis points and help buffer the economy against the tariff headwinds. So there has been a recent update by the chief economic advisor that the net adverse impact of the US tariffs may be limited to 30 basis points of GDP. Uh, but thanks to the cushioning effects of GST rationalization and related policy actions. So, what is our key takeaways when compared to the global headwinds, global, what is happening in the global vis-a-vis Indian markets is we need to watch the rate cut next week, as all eyes will be on the Fed meeting next week. We believe they will deliver a 25 basis points cut as expected. Stocks may rally further, but if they disappoint or emphasize inflation risk, volatility will still jump in. Um, Tariff fallout on India will also have a significant impact. Currency and external vulnerabilities, like a weakening rupee, could feed into import inflation, especially the energy sector and the inputs. RBI intervention will matter. Also, the risk of capital flight if global risk sentiment soars or the US yields rise. Last but not the least is on the valuation. This might be a moment where the quality over growth or value versus growth, this divergence between becomes more pronounced. Maybe tech or AI is still in favor, but not they are not immune to these shocks. So they might correct in itself in the coming volatility. So that's how we need to view the markets in the coming week or maybe a fortnight.
Excellent, sir. Excellent as always. Very elaborative, very informative to our viewers as well. Ashwin, over to you for the technical side as far as the global markets are concerned.
I'm not going to talk about anything else except for silver. So I'm a happy man for the week. So silver, is inching towards its lifetime high. I think what it's about four and a half dollars away from its lifetime high, and I'm very very keen to see how it is going to react there. Is it going to just break the wall and move up like there is no tomorrow, or is it just going to halt, take some time, trap get people to speculate that it is going to be the peak for the next 18-24 months, or is it just going to break the levels and probably accelerate from those levels? So all these things are to be seen, but so far gold and silver have been the outperformers in any portfolio across the globe, if you see. And I mean, US markets, nothing much to add, a muted week. And US dollar versus rupee is still concerning. In fact, I had one question to Prabhanjan here. So, Prabhanjan, let's say dollar and rupee at some point in time starts reversing, would there be some sort of sector or some stock that you would be particularly looking to in the Indian market? Because right, today, if dollar is shooting up and rupee is depreciating, is there any sector that you would like to focus on right now, or is it just like you're not even try to compare stock versus dollar here?
No, the dollars is always like a tricky thing, and I don't see anytime soon the Indian rupee appreciating. So I always see that Indian rupee is depreciating, and to me, maybe in 18 months or so, we might touch maybe around 89.5. It might even touch 90 levels. That's where I'm looking into. Because the last 15 years, if we see, I've been watching the Indian rupee from 45 levels onwards, and it has never come down. And see, we also need to look into the real value of a rupee. The real value of a rupee is where somewhere around towards 90 levels, and any intervention by the RBI is where it tries to keep it. RBI only intervenes when there is a significant move. So having said this, to answer your question, yes, there is one sector which we always look into is the IT sector, which is we always look into that is a sector where I feel there is a lot of a tailwind. It's been 3.5 years that sector is underperforming. There are so many underdogs in that sector. Especially towards the digital, which has got that flair towards the digital side. Those are the companies, and the data center companies is where there are a lot of tailwinds. So always look for the companies where there are tailwinds, not for the headwinds. So that's where we always rupee has always been a direct impact on this IT sector. But however, to me, it never depreciates. I mean, appreciates. It only it goes towards its real value. So that IT sector, having regard to the digitalization companies, e-commerce companies, and the data center companies is where we will always be looking into.
Excellent, sir. I think
I think, yeah.
as we inch close to 90, time to say cheers.
Absolutely.
Okay, I think just to keep it quite interesting, allow Ashwin to go ahead as far as on technicals front, as far as Indian markets are concerned. Then we'll come back to you, Prabhanji, for the fundamentals.
Sure.
What do you, Ashwin?
Yes, sir. So, beautiful chart. After a long, long, long time, we are seeing that the 25,000 levels are not just breached, but even the markets are trying to sustain about 25,000 levels. Very happy to see this chart. I mean, look, this entire area was a painful period for the investors and traders alike. Uh, let's not shy away from that fact. And not only that, option traders too had a very, very tough time because of the VIX dropping significantly from 13, 14, or 15 all the way till about 10.5 to multi-year lows. It was a tough time for the last 3.5 to 4 months. There's absolutely no doubt about, sorry, 2.5 to 3 months. So there's absolutely no doubt about it. Now, what is interesting to see here, Lakshmi, is that while we have closed above 25,000, not just breached, but closed about 25,000, we've also breached the trend line. What you don't want at this level is the markets to come down like this for whatever reason, because that will shatter the confidence of a lot of investors and traders, right? After a long pause, you're seeing some water, and suddenly that water is very salty. You're not allowed to drink it. It's a it's like a it's going to shatter all your dreams. So I don't want that to see in the market. While the options data is reasonably suggesting that 25, the markets will sustain about 25,000 for the next at least 1 week to 10 days. But as I always say, things can change overnight if there is a gap down or a gap up. But most significantly, or more, what the higher probability is that the breach of this level in the next 1 or 2 days. See, mind you, you always, once a trend line is breached or once a significant support or resistance is breached, you want to see momentum picking up in that particular stock or index. If the pace gets slower and slower, then you know something is just not right. You better stay away. So what we don't want is either a consolidation or a significant drop. Ideally, there should be a move up, and if that happens, I think the next pit stop is about 3 to 4% higher from the current level. So that is what I am expecting and anticipating to happen. From the Bank Nifty side, there was not greater participation. It was not outperforming the Nifty itself, so it was a kind of a laggard. We are keen on certain PSU stocks or certain sectors, probably even from the healthcare and PSU banking sector, and a couple of automobiles and metals, particularly, which are showing great signs of a strong breakout, supported by volumes in the last 1 week to 10 days. If those sustain, I think you will have those stocks moving the market for the next 1 week to 10 days to the levels that we have discussed in the chart, Lakshmi.
Great, great. Thanks for this, Ashwin. Back to you, Prabhanjan ji, if you can throw some light on the fundamentals
Right.
for the Indian markets.
Yeah. Thanks, Alan. Yes, I mean, as Aswin rightly mentioned, markets, Indian markets close the week very on a very firm note. Sensex at 84,750 levels, Nifty 50 at 25,700 odd levels, both up more than a percentage each. Mid caps and small caps stayed in high gear. But it wasn't just momentum. It was shaped by three big forces. We have been always talking about the GST reset, the currency, and the crude equation. But there is one thing which we always, undermine. Our market regulator SEBI's bold reforms. That has got a very significant impact both on the technical and also on the fundamental aspects.
Yeah.
Um, so on first on the the GST, India has collapsed its old structure for the benefit of our viewers. I'll just touch upon it. So 0, 5%, 18%, and 40%. That are the new structure. And essentials like food, healthcare, insurance are exempt. FMCG, autos, cement, and appliances are cheaper. But the sin goods like tobacco, pan masala, sugary drinks, and luxury goods very harsh 40%. This reform is like the biggest since GST began in 2017. It also means a lot for good administrative convenience, which means fewer disputes, lower compliance costs, and a stronger push to consumption. Secondly, on the currency, the rupee closed the week around 88.2 per dollar, just shy of the record lows. But why does this matter a lot for the from the perspective of the stock markets? Is a weaker rupee makes imports, especially oil, chemicals, aviation fuel, and electronics, more expensive. That squeezes the margins in the short term, and heavy import heavy companies and raises the inflation risks. Now the crude. Global oil stayed near 82 to 83 per barrel, cushioned by the steady OPEC supply. India continues to import at a discounted Russian barrels, which helps. But if crude spikes again, the weak rupee, it will weaken the rupee, and it will amplify the pain. The combination of currency and the crude is the biggest risk to India's inflation path, and therefore RBI policy stance is very crucial, and it always has a direct impact on the policy stance. Now, these SEBI reforms, you know, SEBI reforms this week grabbed investors' attention as well, and we can't ignore that. What did they do is, they have eased FPI entry with single window clearances. That will boost the foreign inflows. IPO norms, they have liberalized, smaller issue sizes, more flexibility on the for anchors, and a longer glide path for larger firms to meet public shareholding. This is very important, when they do anything like, for to meet the public shareholding. Even the smaller companies with the smaller SMEs also will be encouraged to come into the capital markets and raise the public money, and the derivatives discipline. We cannot ignore the SEBI's reforms on this derivative discipline. SEBI flagged risks in weekly options speculation, signaling tighter checks ahead. The message is very clear: encourage stable inflows, deepen equity markets, and curb excesses. So, to just give a sector by sector, what would be the winners, and where we need to be a little cautious, and structural losers. FMCG, autos, durables, housing, healthcare, logistics, they all benefit from the GST cuts and festive season demand. Banks and NBFCs have always been our favorite and could ride on the wave if RBI turns dovish. Uh, where we need to be cautious is oil and gas, marketing, aviation chemicals, electronics imports directly exposed to the rupee and crude swings, and the structural losers or tobacco, sugary drinks, and all that, tax heavy and demand capped. So for investors, the playbook is very simple: lean into consumption and housing, and stay cautious on import dependent businesses until the rupee stabilizes. That is the key. And also, rupee plays a very sentimental role. Imagine if it touches 89. So definitely there is always a room to touch 90, then there will be a very huge sentimental impact on the rupee. So this week wasn't just another week of trading. India simplified its tax system, navigated a weak rupee and oil pressures, and laid down fresh capital and market reforms. Short term, the rupee is a headwind. Medium term, GST and SEBI reforms are a powerful tailwinds. In one line, if you ask me, India's markets are balancing currency stress with reform strength, and investors who align with that balance will lead the next leg up.
Well said, sir. Well said. Very well said. In fact, that brings me to our usual uh, close. And as usual, I have a quick question to both of you. So we did have these two major reforms as far as GST is concerned, and the recent SEBI announcements. So, in your opinion, setting aside the other factors, are you expecting the markets to go up leading to Diwali? Yes or no? A simple question.
Uh, to me, no. It will be on the same lines.
Okay, Ashwin. Ashwin, I think you're on mute. If you do not wish to answer, you can mention it there.
Do I have that option? Uh, I like a third option called maybe.
Maybe. Okay. Okay, great. I personally feel that this reforms, be it GST and the SEBI announcements that has come out recently, once it is fully absorbed into the system, which could take a couple of weeks, we should see markets going up, is my personal opinion. Let's see. Just to make it interesting, we have three different views. We will keep a watch on this over the next few weeks. And as usual, none of the discussions we have had in our channel constitutes an investment advice. These are purely for educational purposes only. We'll be back in a week's time from now. Until then, take care and bye bye.
Have a super relation day.